Hi everybody, George Cavaligos from the floor of the CME Group. It's our pre-non-farm payroll number video here today, and the markets are still stuck in the range. The bond market, which I specialize in, has been stuck in a 135 to 145 range since last September. If you look at a longer term chart, the bond market and the stock market have often traded counter trend to each other as money has shifted out of the perceived safety of bonds and notes and into the better returns possible in equities. That sort of correlation has broken down over the last couple months, unfortunately, as the big gorilla in the room, the 8,000-pound gorilla, the Federal Reserve, has been buying bonds and notes, longer dated stuff, and selling shorter dated stuff in Operation Twist. If you look at that longer term chart, back last spring and last summer when bonds and notes were trading down at a 120, bonds were trading with a 125 handle the last time equities were up at these levels. Right now we're trading 142 handles. So that system's broken down, and we're really looking forward to the end of Operation Twist in June, and hopefully no more Fed intervention in the bond market after that to get things back to a more normal environment. Until then, we're going to be focusing on these numbers. The non-farm payroll number is obviously the big number for us every month. We look at strong non-farm data as being somewhat negative for bonds and notes, and we look at weak non-farm data as being supportive of bonds and notes. Right now, we're looking at a range trade, like I said earlier, between 145 on the high end and 135 on the low end, and trying to get some consistent economic data to drive the market one way or the other outside of that range over the next couple months, hopefully after this June Operation Twist program ends. We're thinking that we want to look at the high end of the range if we get a weaker than expected non-farm number, 143.5 to 145.5, where we would initiate short positions. Conversely, down around the lower end of the range, around that 135 to 138 area, where we would initiate long positions. Excuse me, at least until June, when this Operation Twist program hopefully will end and we'll be done with the Fed I don't want to say manipulating, but being deeply involved in the bond and note market. That's it, guys. Have a great time. Good luck with the number tomorrow morning. Hopefully we'll keep you guys updated on Fari's website and on my website, and we'll find some great opportunities to trade these numbers over the next couple weeks.